It's another training day right here in Lagos, Nigeria. Here are the stories you should be watching at this time. And right there we see Dangote-Ethiopia ink deal to build $2.5 billion fertilizer plant. And Zimbabwe inflation slows sharply in August amid currency reforms. And Egypt's dollar resources hit record high of $8.5 billion. And guess what? It's not hot money. And it's great to have you join us. I'm Ladi Williams. Let's get a check on how the money is playing right here. First, with global oil market now, we did see some weakness earlier, and that continues at this point with investors still trying to make sense of what's playing out in the geopolitical scene there. $67.80 a barrel. That's what we're seeing for Brent crude, 0.37% down this afternoon. And for the US WTI grade, that's down 0.33%, $63.94 a barrel. Let's get a quick check now what's playing out with metals. And we see gold, that slipped. That slipped in early trade. $3,388 per ounce, 0.1% down. And for the U.S. gold futures on the flip side, that's the only one in the green, $3,438 per ounce. And it's red across board for spot silver, platinum, and palladium. We see spot silver there down 0.3%, mirrored by platinum. But palladium seems to be trying to, or might lose that $1,000 mark per ounce with the way it's going over there. And to some other stories now in the market. Ethiopia signed an agreement with Nigeria's Dangote Group to build a $2.5 billion fertilizer manufacturing plant. And according to Prime Minister Abiy Ahmed, the investment is part of the Nigerian billionaire Aliko Dangote's efforts to end Africa's fertilizer imports. To be located in Gode town in Ethiopia's southeast, the plant will produce about 3 million metric tons of fertilizer a year. The agreement was signed by state-owned Ethiopian Investment Holdings and the Dangote Group. Ethiopia will have a 40% stake in the venture, while Dangote Group will own 60%, and that's according to the EIH Chief Executive Brooke Taye at a signing ceremony. All right, to other stories now. We see Zimbabwe recorded a notable slowdown in price growth in August, reinforcing official claims that the currency reforms are beginning to stabilize the economy, even as year-on-year inflation figures remain elevated. According to the Zimbabwe National Statistics Agency, the ZiG month-on-month inflation rate eased to 0.4% in August, a sharp decline from July's 1.6%. Food prices in local currency slipped into negative territory, while non-food inflation also softened. And we see economists say the figures suggest growing momentum from tighter monetary discipline and structural reforms. And Zimbabwe's gold exports have registered a strong performance, surging to about 1.3 trillion in the first 7 months of 2025, a significant 6.5% increase from the $863.1 million earned during the same period in 2024. That's according to latest figures from the Reserve Bank of Zimbabwe. The growth means that Zimbabwe has already generated over 91% of the $1.5 billion total from gold export for the entire previous year. A month-on-month analysis of the data reveals a sharp acceleration in earnings. While January to April showed consistent gains, the performance in the mid-year months was particularly higher in that market. And now let's get a check on what's playing out in the commodities space now. Definitely we have our eyes on shea nuts and butter there. We did get the directive there from the government, a 6-month ban on exports of raw seeds, and definitely that's going to send some ripple effects in the market right there. Let's bring in Tomiwa Majewo, is an analyst at financial derivatives company. Hello, Tomiwa, great to have you.
Good afternoon, Ladi. Thank you for having me.
All right, so yeah, we have this export ban now of raw seeds. I guess this should be good news. You know, at this point, we're trying to add value to our exports at this time.
Yes. I mean, as a country, as an economy, if you have any opportunity to increase your export earnings, to increase your foreign earnings, you go at that. And you know what the government is saying, that we realize that we produce about 40% of global share nuts globally, right? And we've noticed that the global market value of shea butter is about $2.6 billion. But we are only raking in about $14 million. And what they're trying to say that, okay, let's pause, instead of exporting the raw material, let's have a situation where we are processing the shea nuts into shea butter ourselves, so we can get a greater value and get greater income from the product itself. So that's basically what is happening. Is just, as I said, a means of value addition, where instead of just exporting raw shea nuts, we actually process it into shea butter first before we export it, because there's a growing demand for shea butters globally. It's growing actually about 8% annually, and is expected to reach about $3.7 billion in 2030. So if Nigeria is able to get a huge amount of that, that's going to be a great boost to our export earnings. We currently produce about 40% of total global shea nut production. So we have the comparative advantage there. So we should be able to really leverage on that.
Well, I guess, this is good, for, value addition to our exports. But I feel like some players that benefit from, exporting the raw commodity, I guess they will have a shock, right there. But what lessons can Nigeria learn from, Ghana's stronger processing capacity to boost, its own shea industry?
Yeah, so I mean, it's one thing to make a policy, right? It's one thing, another thing to do a proper execution of the policy. And even just by this policy, there might be people that are already affected by it, because there are people who export just the raw materials already, who this would affect. So, we've noticed that Nigeria is not the only country that produces shea nuts and export shea nuts. It's actually huge in West Africa, and we've seen that in Ghana, in Burkina Faso, they've actually been able to do better than Nigeria in processing the shea nuts first before they export it. So there are a lot of lessons we can learn from that. One is that we need more processing firms in the country. First of all, it's not just about putting a ban on the export. Do we have the capacity to process a lot of these shea nuts first? So in Ghana, they have a cluster of companies. They have about 3 or 4 processing companies that actually buy or procure the shea nuts from farmers who are mainly women in the rural areas, and then they process it. So, Nigeria recently, we just actually have a new processing plant in Niger, but we need more than just one. We need about 3 or 4 or 5, a cluster of processing companies that will be able to actually take the shea nuts and put it into shea butter. And also, we also need to work on not just forward integration, but backward integration. We've also seen that in Ghana, the companies work very well in line with the rural farmers. There's that huge market integration. So we need a formal structure in Nigeria where women, because mostly it's women that work in this sector, where these farmers are able to directly work in line with the companies and supply them with the shea nuts. So that way we are making sure that their income stays strong and there's better integration to actually get the product and process it into shea butter.
So since about 2.2 million women depend on shea for their livelihoods, how can Nigeria make the sector more sustainable and protect these jobs against climate and market risks?
Yeah, so we are seeing a lot of risk actually happening in the shea nut sector. One of the a report has shown that in some countries, they actually the deforestation is happening, where some of these shea trees are actually cut down, because these women have to get firewood to get energy, because they're not able to access other cleaner source of energy. So we are seeing where trees are being cut down to get firewood, and that is just like killing the hen that lays the egg. So basically, first of all, we have to make sure that there are good infrastructure set in the rural areas, where these people are able to work in conducive environments and are empowered to do better. Also, we can't forget the place of agricultural extension services. We need projects where people, and it's not just these farmers, even people who are not necessarily working in the farming sector can find a way to support them by, one, training, of course, and two, just giving them better ingredients and better machines to work with, because most times they spend 20 hours trying to process the shea nuts, and after working the 20 hours you just get a product that is just about $1. So the input to output cost is not there, but they have access to better technologies to be able to increase their output level, their productivity, and their incomes will rise better.
All right, Tomeo, we'll keep tracking to see the impact of this export ban of shea nuts, and hopefully we get more value added before we send out all those exports. Thank you so much. Tomeo Ajowole is the analyst at Financial Derivatives Company. Thank you for coming on today. All right, so other stories now. See the Tanzanian shilling strengthen against both the Kenyan shilling and the US dollar, supported by steady foreign exchange inflows and resilient domestic fundamentals. The currency market data showed the Tanzanian shilling gaining around ground as increased export receipts, remittances, and a tighter monetary policy that helped bolster demand for the local currency. Analysts also attribute the rally to strong central bank interventions aimed at stabilizing the market. Against the Kenyan shilling, the Tanzanian currency is appreciated on the back of growing cross-border trade flows and investor confidence in Tanzania's macroeconomic outlook. Similarly, the shilling's performance against the US dollar reflects relative stability compared to peers in the East African region. And Kenyan lawmakers are moving ahead with plans to introduce an air ticket levy, closely following Tanzania's recent imposition of its own international travel fee. Kenya's parliament passed the Air Passenger Service Charge, the Amendment Bill 2025, which proposes 600 Kenyan shillings charge for domestic flights and $50, approximately 6,462 Kenyan shillings for international flights. The bill aims to bolster aviation safety and tourism promotion while streamlining the distribution of proceeds supported by sustainable financing mechanisms. Kenya Association of Travel Agents, that's CATA, CEO Nekano Sabula supports the concept, provided the new fees are managed transparently and directed towards enhancing the travel infrastructure. All right, let's get a check on what's playing out with the markets that we track now, starting with on the African continent. And we see the NGX there holding on to the green marginally, about 2 basis points, 141,277 points there. So, it's green, but not convincing, at this point. But we'll see if that continues, going forward. But let's get a check now on some news in the markets there. We'll see in a major leadership shakeup, Access Holdings PLC, they announced the appointment of Innocent Ike as its new group managing director, chief executive officer, effective August 29th. That's 2025. This move follows the return of Agboje Mokwede as chairman, and it's part of the broader corporate restructuring to strengthen governance, comply with the Central Bank of Nigeria regulations. Mr. Ike, who brings over 30 years of banking experience to the role, succeeds Bolaji Gbede, who served as acting GMD CEO for 18 months and will now return to her previous position. And definitely we've seen the impact of reactions. I won't call it impact at this point, just reactions, investor reaction there. I did check on the Access Holding share price there, and definitely was down at intraday. But we'll keep checking to see how it plays out. But let's get a check on other markets that I will track now. We see in South Africa, the Johannesburg Stock Exchange, that's 6 basis points down still. Not that convincing to the downside, 101,948 points. Let's get a check on that's East Africa and North Africa. That's talking about the EGX30. We see that's down 0.25% at 35,587 points. Nairobi Stock Exchange closed yesterday in the red, snapping gains that we've seen so far this week, but still holding on to the 171.57 points. Now, to the Gulf region, we see the sentiments in the Gulf region is kind of mixed, but negative sentiment in the UAE, 0.49% down. That's for the Dubai index. Abu Dhabi index, that's down 0.28% at intraday, 10,153. Points now. We see Saudi Arabia has the same color right there. The Tadawul down 0.20%, and a bigger drop for the Qatari index, about 1% at intraday, 11,226 points. All right, let's get a check now on other markets, and we see the U.S. futures, just the tech-heavy NASDAQ in the red there, but little change as investors are still, digesting the they're still weighed down by NVIDIA's latest quarterly results, even though they beat expectations. We see the impact there on the Dow Jones Industrial Average. That's in the green for the 0.14% for the futures. The S&P 500 futures, that's about 3 basis points up at the time we took the numbers there, looking quite flat at this point. But investors still have a lot to look out for, at this point. NVIDIA, which makes up about 8% of the S&P 500, fell nearly 2% even after its second quarter results. That beat Wall Street's estimates. So the chip stocks also came under a bit of pressure following the artificial intelligence bellwether's results there. So that's the sentiment we're seeing right there. We'll see how it closes today. That's for the U.S. markets. Let's get a check on Asia now. We see the Asia markets did close mostly in the green. The Nikkei, just the Nikkei, and the Kospi managed to close in the green, 0.29, 0.73%. Hang Seng Index, that was down 0.81%. So on the back of the tech results we saw there. And the Shanghai Composite managed to close in the green with big 1.14% advance. But the Nifty 50 still under pressure there from what we saw that was yesterday, and definitely is on the back of what we're seeing play out with the U.S. and India there. And definitely the U.S. don't want India buying Russian oil. So we're seeing that pressure on the stock market right there. All right, let's take it on to Europe now. Let's get a check on what's playing out in Europe. We have Lars Holter with the details. Hello, Lars. Great to have you.
Good to be with you, Lottie.
Fantastic. What's playing out there in Europe?
Well, it's another day in Frankfurt and another look at the DAX that is not moving much at all. We were up a fraction, now we're down a fraction. Essentially, we're flat in that same corridor. But you know what, Lottie, as boring as that looks, it is worth taking a look behind the curtain sometimes. There's talk of some institutional investors, the big ones, the banks, the hedge funds, selling some of their positions. And that is a little bit proof, I think, of a certain level of fear. Many are thinking that once we are breaking out of that sideways trading pattern that we've now seen for seemingly weeks, once we're breaking out of that, it might be downward rather than upwards. Not really surprising, of course, given the situation we're in, especially around trade and with Germany having seen some weak economic data recently. So there is quite a little bit of angst in the market, but for now things are still holding up and trading sideways.
So let's pivot to another topic. Now, see, Germany has long tried to move more people from taking the cars to riding trains, but now the country's railroad is in trouble. What can you tell us about the current situation?
Yes, Ladi, indeed. The Deutsche Bahn, as the rail provider is called, is struggling with a leadership vacuum. The government has recently fired the CEO. Now, one should know, of course, that the Bahn is set up like a regular company, but it's fully state-owned, so the government can do that. But they're having a hard time finding a successor. Apparently, some top managers have been asked, but they politely declined the offer, and there's many reasons for that, including the relatively low pay compared to what other top CEOs in the country are making. And then the position is not very attractive because even a CEO can't make business decisions at that company as he sees fit. He is bound to follow directions from the government, and those have at times in the past been chaotic. The government wants the rail company to save money, but then they ordered them to have more overnight trains even though they weren't profitable. One year they wanted to cut down on freight, the next year they wanted to expand freight. On top of all that, you can also not really imagine a less popular position in Germany than being in charge of the railroad, with trains being late, station buildings in disrepair, train bistros, toilets and air conditionings regularly out of commission. Taking a train anywhere in Germany these days is often not a pleasant experience, and thus a new CEO would have to know that he will constantly be watched and criticized, not only by his bosses in the government, but also by millions of customers.
So what are the options, for the future here? What's going to happen, to the German railroad?
Well, the company needs a strategy for the future. That's for sure. They don't really have one, but maybe it also needs competition. In Italy, actually, they had very similar problems a few years ago, but ever since the state-owned rail provider there got competition from a private company using the same tracks, things did actually improve. Trains got more punctual, prices are down, so maybe that's an idea to copy. Of course, the German system still needs a lot of work and a lot of investment in its infrastructure, in the tracks in particular, but it also needs to change its perspective and keep a closer eye on customers' needs. And for that, actually, one analyst recently had a really interesting idea, a small change to the perks for any new CEO, that he or she should not get a chauffeured business car any longer. The idea, make the CEO take his own trains every day for short or long distances, so that at least they can experience how bad things really are, and hoping that it will change the perspective and actually help improve things.
All right, but Laz, how do you like to move around? Do you take the train or you like to drive?
I try to take the train for longer distances. I have a long trip actually coming up this weekend where I'm basically going all across Germany. It's an 8-hour ride, and I gotta tell you, I'm not excited about it, but I just hope I'm gonna arrive on time.
Fantastic. We'll keep watching that. Thank you so much, Laz, also for the details of what's playing out in Europe. Thank you.
Thank you, Ladi.
All right, let's flip over now to the crypto market. Definitely, the market never sleeps, always awake, always trading at this point. We see Bitcoin there making a comeback. You'd call it that at this point. It's trading at $113,000 per coin. Ethereum, that's also up 0.12%. Didn't lose that 4,500 level, even with the rout we saw in the market there. And we see pockets, major pockets of red. XRP has managed to be in the green. BNB, that's also up. Cardano, Solana, the big boys and top 100 looking good at this point. And let's look at some headlines in the market now. See Cathie Wood's ARK Invest. We've added $15.6 million in Bitmine stock across ETFs. ARK Invest increases exposure to Ethereum treasury company as Bitmine Merchant Technologies, this time adding another $15.6 million worth of shares to its portfolio. The Cathie Wood-led firm purchased shares across the three of its active ETFs. That was yesterday, bringing its total investment in Bitmine to over $300 million. As of now, ARK holds nearly $600 million worth of coin shares, although it's trimmed a small portion last week by selling about 5,721 shares. Then also hot, we see about $1.17 billion to be released through Cliff unlocks, while $3.36 billion will come from linear unlocks in September. Crypto projects are set to unlock about $4.5 billion in vested tokens. That's in September, according to data tracker Tokenomics. Tokenomics data shows that about $1.17 billion will come from Cliff unlocks, while $3.36 billion will be released through linear unlocks. About $4.5 billion in tokens will become available to investors, project teams, and other stakeholders as vesting agreements expire. When new projects come out, sometimes they allow some investors actually buy some of these tokens, but they're not released to them immediately. So that's why you see these unlocks come sometimes. Then we see for the Yeezy meme coin, yeah, a lot of wallets lost money at this time. You see that stock collapsed by about 80%. That's the meme coin, dropped by 80% on scoring the risk with celebrity-backed tokens. More than 51,000 traders incurred losses on Kanye West recently launched meme coin. I guess it's as expected, highlighting the potential risk of trading celebrity-endorsed tokens with no intrinsic technological utility. The Kanye West-linked YZY token that was launched on the Solana blockchain August 21st rallied about 1,400% within the first hour before losing over 80% of its value. And I also hear about 11 wallets made $1 million from this after 51,000 traders lost money. Also hot in the crypto market today, we see Trump Fed chair list. Yeah, we're seeing a lot of shakeups there. With President Trump there trying to pick and choose who's on the Fed team there. So he has his list at this point. They're considering about 11 candidates to replace Jerome Powell. Some have previously signaled a constructive stance, towards, crypto. Treasury Secretary Scott Bessent, he did say that there were like 11 very strong candidates for the Fed chair position, which they'll begin to vet, and shortlist, starting, next month. So definitely, I'm sure investors will be watching out, for that, because at the end of the day, investors are still worried about the independence of the central bank in the U.S. So definitely a lot to watch out for, and we'll definitely be bringing you all those details here so you know where to make your next investments. Thanks so much for watching Business Incorporated today. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.